What's going on, guys? Real Trader Joe here with another portfolio recap. We have not really a whole lot changed in today's markets. I am happy to say we did take a bit of a beating in Spotify, but we'll get to that shortly here. I do go ahead and have the chat up in another window, so if you guys want to go ahead and fire off questions or comments, I kind of keeping a side eye on the chat, and we'll go from there. I also enabled captions on the stream, or closed captioning by YouTube, so if you guys want to do captions that way, feel free to, but I can also just enable the captions right here in OBS. I have them off right now just because, they block some of the rolling numbers and stuff that we're going to want to see, but if you guys want the captions, more than happy to turn them on. Just let me know what you think. Going into the portfolio review, we did do some stuff today, mainly rolling our Spotify position, and then we closed some stuff ahead of earnings. So as I was kind of thinking about the topics that I wanted to go over today, I decided to go ahead and focus on risk going into a binary event. So we'll just go ahead and open up the closed orders. Oh, hang on. Maybe that doesn't actually work now that the market is like... Oh no, yeah, okay. So I just have to filter that out. Cool. So Marvel, I did end up closing this one out for a profit. And if we go to... That's interesting too. So yeah, it doesn't look like I can select the open order chain. But this one was about an 80-cent winner. I'll just go ahead and save us the verbosity involved here. It was about 80 cents, and we had collected something like, $1 and change. So it was about 40% profit, and I just decided to go ahead and take it off right then. No reason to just leave 40% profit hanging out, kind of just in the wind when, a Fed announcement could totally just turn that around and kind of ruin our game plan there. So all that to say, yeah, took Marvel off and was more than happy to just book the win. Palantir, same plan that I've been kind of talking about for the last couple days now. I don't really see the gamma risk being a problem until about 15 days, 14 days, and look at that. We're up another $9 and maybe able to squeeze 20-25% of this position out. So looking good. Capital requirements also looking healthy there. I don't mind spending $600 to try to make a little bit more profit, but we are going to shut this guy down either tomorrow or Friday. I don't really want to hold too much closer to expiration, especially with earnings looming. There's a chance that that IVR is going to stay where it is, or potentially even hurt us, depending on what the meme stock gods have in store for us. One Lot Jason says, profits are best. You can't argue with that. You can't argue with a win. Oracle. So let's talk about Oracle for a second. You can see that I actually closed out of my straddle here. I have the 115 on now. Had I kept it on before the Fed announcement, I would have actually benefited pretty significantly here, pretty much an at-the-money straddle, but of course you don't know what's going to happen, so I decided, well, why don't we close out of the straddle, because the short straddle was bringing me, roughly 30 or 40 short deltas, somewhere in that range, and I said, okay, well, why don't we just reestablish, we'll delta neutralize, we'll get in on a new expiration, and we'll get ourselves a higher chance of profit at about 72% instead of the 50 or 60% we were working with before. And on top of all that, we're buying ourselves more time and putting ourselves in a bit of a better position to where we don't have to manage as much. So I was pretty happy with that. You'll also notice the capital requirement on this position is pretty low. I was actually required to hold about 3,000 on this position yesterday, and not anymore. Now I'm only holding 1,800, so it was capital efficient. And for all those reasons, I just decided to go ahead and reestablish the position, reestablish the strangle, give ourselves another shot. We did close the straddle for a small profit, pretty much a scratch, 10 or 15 cents or whatever it is. But I was happy to reestablish that, and, no worries as far as Oracle's concerned. Micron still kind of going against us, still keeping the 65 straddle, hoping for a comeback here, but 36 delta, a little bit higher than I'd like. I wouldn't mind, like I mentioned yesterday, kicking this guy out, either just rolling the 65 straddle out in time to the September monthly expiration, or possibly kicking it out to this janky strike here at the 67.5. Either way, both of those options sound good. I don't know. Let's see. Let's just play around with the idea of a really tight strangle. So let's just go out of the money here, out of the money here. Yeah, that would be for a debit. We could do something like this, where we kind of hedge our bets, give ourselves a really tight strangle, collect 66 credit, 66 cents in credit. Maybe a little more, maybe a little less. Sort of depends on what the markets have in store for us, but either way, I am incentivized to get out of this trade sooner rather than later because we have an IVR rank of 1, which is not ideal for undefined risk. And you can see that we are losing, so I am going to want to make some adjustments, get a move on, and keep trucking. Spotify. Yeah, Spotify was just a face punch. I originally was going to go with that short put, like I said yesterday, and you can see I made some adjustments here already. It rallied about $8, so a little more than 5%, and we started with the 130, and of course we've rolled now from the 130 to the 155, so we've gone all the way up and shielded ourselves from some pretty significant losses had we stayed. I'm currently working on an experiment where I will roll the untested side of a strangle once it hits a certain delta threshold. Once it ceases to provide at least 15 deltas in protection on the untested side, I will roll it up and give myself a little bit more protection. So we're currently experimenting with that, and it seems to be working well in this instance. Screw Spotify. One Lot Jason says, yeah, I don't have premium anyway. They can throw all the ads they want at me. I'm not doing it, man. The family plan, they're hitting me with family plan ads now. I mean, at least as far as I know, I haven't made a family, but if I have a family that I don't know about, I need to have some very serious conversations with some certain individuals, either in my past or now. So yeah, not gonna buy Spotify Premium, especially now that their stock is back up $8. Pretty much just undid that reversion, but the volume of buys was about half as much as the overall selling volume. So we'll see what happens there. I'm not really, with Coinbase kind of anchoring my losses. 140 looks like nothing. 210 looks like nothing. 212 rather. XOP kind of coming our way a little bit. I mean, no movement is good movement in terms of an option premium seller, so happy to stick with the 136. We might just continue to hold on till 21 days, and then we'll probably roll this out, and I think probably roll it up just to delta neutralize. If we get whipsawed, we get whipsawed. It is what it is. If XOP retreats to 136 and we roll to 139, whatever, we'll just start the rolling process over again. But I think I would rather be delta neutral, add extrinsic value, sacrifice some theta as we're going to have to do in order to roll to a later expiration. But I don't feel too bad about XOP. I really don't feel too bad about anything in my portfolio other than Coinbase, which we'll get to here in just a minute. AMD, pretty much no movement. Have the 125, 105 on before earnings, 6 days to earnings. Probably kicking that out, like I mentioned yesterday. Wouldn't be surprised at all to see some profitable rolls coming into earnings, but we're just going to hold on. Basically even on the position, and we'll see what happens. Coinbase. Now this is what I was talking about, right? Ordinarily, on an inverted strangle, a $2 rally would hurt pretty badly. We did get an IVR drop in Coinbase, which was nice. We were at approximately, and I say approximately because I'm trying to figure that out. Yeah, we had a high IVR of 23 and a low IVR of 17. Today we have a high IVR of 19.5 roughly, and a low IVR of 16, and 16.2, 16.19. So we did get an IVR drop, which is always cool. But even so, $2 to the upside would have really injured the inverted strangle in its traditional sense. But like I said, we got this weird expiration thing going on. I kind of hashed that out over the last 2 recaps, so I'm not going to spend too much time on it here, but just to give everybody who's new or seeing this for the first time a quick illustration of what's going on. if we come in here to the order chain, you see we collected 1461, so not enough to have this inverted strangle profitable by itself. But here's the interesting thing. So right now we are short about approximately 44 deltas, right? Right at around, like actually, and by right around I mean exactly, the last trade was 99.75. If we kick this out a couple days and start moving through time, as I struggle to find the calendar here somewhere. Where's it at? There it is. Yeah, I knew I was clicking on the wrong area. Had a long day, guys. I guess I lost a few neurons in today's calls because I just struggling to find that button. But yeah, if we go forward a few days, you'll notice something interesting. Our little max profit zone up here, the apex of this curve, is just moving towards the current stock price. And if we just go out a few days, let's just say August 1st, sorry, my mouse has been having some problems, and we're going to have to resolve that, because that's getting annoying, but I think I'm going to have to buy a new mouse here in a second. 97.5 delta at that point is 48 short deltas, so we're actually increasingly short as we get closer to expiration, but also we are not as short as we would be currently. So if we go to today, and we look at the 90 strike, we're short 12 deltas at the 90 strike, right? And we're short 45 deltas, approximately, at the 100 strike. If we move out to August 1st, you'll notice we're short 49 deltas at the 100, and we are actually long at the 90 strike. So those deltas getting increasingly sensitive as we get closer to expiration. And I say all that to say that the $2 move in Coinbase really doesn't bother me all that much. I would rather have coin, go up $2 and then kind of lose some ground. And we all know stocks, they take the stairs up and they take the window down. So when this stock does drop, if it does drop, it's going to drop hard, and it's probably going to blow right past this 97 put. I don't mind having a little bit of insurance to the upside, giving that 97 put a little bit of room to breathe, and sort of making itself nice and cozy against that fireball of theta that we're collecting. Look at that, 30 theta on just one option. I mean, that's madness, and that's only going to increase. I mean, that guy's got 9 days to expiration. Look at all the profit we had today, 136. I mean, for all the money we lost on our short call, this short put basically shielded us, and that was exactly what this short expiration is intended to do. This 533 is a bulwark against a future rally. It is also punishing Coinbase immensely for staying where it is. So, of course, the goal with an inverted strangle is to have the stock price inside of the two short strikes. And should Coinbase not cooperate and continue to just kind of mosey about this 95, 97 range that it's been in, we are going to be looking real nice and have collected, $5 extra. And from that point, it's going to be pretty much a matter of trying to decide what we want to do, not prior to earnings. Well, prior to earnings in the sense that we, if we get out of this trade, we are doing so prior to earnings. Let me just show you what I mean. 97 put expires August 4th, and that's when the Coinbase earnings are. We are not holding that 97 put into earnings. I am not going to take the chance that Coinbase, with its 100% rally, is not going to drop after the earnings report that it's going to give. So I say all that to say we are closing that 97 strike put out the day before earnings, meaning that the day before earnings we're going to have a decision on our hands on about August 3rd. Like, what do we want to do with the 70 short call? Well, I'm thinking we just, the day before earnings, we go into this 51 DTE. It's not going to be 51 DTE. It's going to be in the 40s by then. But we go there and we sell something like the 80 put or the 90 put or the 75 put. We'll just kind of see what happens. But I'd be really happy, to get some accommodation from Coinbase either during earnings or afterward, and then slowly kind of work our way back to the 70 straddle would be great. That would be a huge improvement, probably to the buying power of our position as well as the P&L to it. So, short version of the story, not upset with a $2 move in Coinbase and $33 in loss. Probably because the $33 is anchored against my almost $2,700 loss. And like I said yesterday, man, I mean, it hurts, but, we're making adjustments. We made mistakes. This has been a great trade to learn from, and I am going to keep it in mind for the future. This is what I'm going to remember for a while. And that's it, guys. That's the portfolio review. So in terms of eliminating risk before the binary event, we closed out, not Micron, but Marvel. We closed for a winner, not knowing what was going to happen. It looks like the market really didn't change too much. I mean, I didn't have my eye on it all day, but I thought we were down slightly more as the day started, and then I think, yeah, the NASDAQ up 29 points. The Dow and the S&P, not really changed too much. The S&P pretty much even, and same with the Dow. So, slight losses or slight gains all around, and yeah, I was happy with today. Any day that an options selling, trader or short options trader does not just get totally crushed is a win in my book. So future trade ideas, I would have to look at my capital requirements and see where we are. I'm pretty sure I'm about maxed out as far as my IVR tolerance and my capital tolerance relative to the VIX. VIX, by the way, 13 and change. So if we look at that, it's pretty much just been straight down, and we'll see. I haven't had a chance to review the Fed minutes yet. I don't know what Jerome Powell said, but evidently it didn't move the markets too much. We will see if that continues into tomorrow and just from there. But moral of the story, we do have some slight cuts and then a big gaping amputation to our account that we need to address. So I'm sort of in damage control mode, not really looking to put too many new trades on, just trying to ride out the ones we have, pare the losers down, and move forward from there. By the way, guys, we are going to keep doing these recaps at 5 p.m. Central every day. So if you're new or you haven't seen these before, I encourage you to go check out the previous recaps and hit the subscribe button. Stick around. Be on the lookout for the streams. One like Jason saying it hurts, but it's how you learn. Yes, that is 100% correct. I can't say I've really learned from anything that wasn't painful. All the things in my life that I've learned from have been painful lessons. When I was 3 years old, I put my calf on an exhaust, and I have never touched an exhaust since. Car exhaust, the exhaust pipe just after the car turned off, and haven't done that again. So you best believe I'm gonna remember. This is gonna be one for the. If I make it out of this is gonna be one for the books. I just, full disclosure, have no intention of making out of this trade profitably. I would be more than happy with a $400 loss at this point, because that's essentially $2,200 in profit added to my account. $400 loss as opposed to $2,600. And for context, if I got 2,200, right? I can do math. It's 2,600 total. If I got out with a $400 loser, that would be 2,200 in profit, and I would be happy with 2,200 extra dollars added to my bottom line, which, by the way, would propel my account to an all-time high. So if we get out of this with a scratch, we get out of this with zero, we are going to be in a good spot in terms of profit and loss for the year. Do I think we're going to get to zero by the time the year is over? We may not. If we're that lucky to get to zero at all, if we don't just continue to take more pain. But we may not. This 70 call is in December. He's a ways out. And if we really had to get crazy, I was thinking about doing something like this. Rolling this guy probably, we could still get a credit at 80, but if we really needed to, we could buy this back, sell, I don't know, maybe something in here, sell the 80 or the 85, and then kick that short call up even farther than that. Whoops. Get rid of that. Yeah, now I'm all turned around here. So we bought back all our stuff, and if we wanted to kick that up a little higher, yeah, so we would still be there for a debit. But I've been playing around with this a lot, and seems to me like the best move. If there was ever a best move, this leap option, not giving us too much theta. 4 and change, not something to write home about there, but if we decided that we wanted to go all the way out, we could go way out to like December 25 and do something like this. You know, we'd get 1,500 back in buying power reduction. We would get 16 delta, and we would only lose 2.5 theta on the position. Not bad. Not bad, considering that we would, at that point, be entirely out of the money. We would receive a credit, most likely, for doing this. I mean, the liquidity on these options is crazy. Maybe we wouldn't get a credit, but I'd be happy to get $1 here, for sure. And, I don't think I'd mind. Now, that said, that option's going to expire in a long time. But I think, you know, if that gave us 16 long deltas and gave us 1,500 in buying power reduction, that is a move I am considering. Because, I mean, we'd only lose 2.5 theta. We get a bunch of pretty much eliminated directional risk. We're out of the money, and we'd get capital back. So that is something that does not actually seem that crazy to me. We're going from the 70 to the 115. And if we look at the profit and loss graph at that point, which I totally just screwed up, so now we got to go back in here and rebuy back our theoretical December 2023, go to December 2025, sell, where was I? The 115. Yep. So if we sold the 115, our profit graph is not a joke. I mean, that's a significant amount of profit there. And it looks like a pretty wide range. I mean, our probabilities aren't that great, and I would have to do some more evaluating to see whether or not that's profitable. But the moral of the story is I am willing to sacrifice some theta in exchange for a pretty decent directional protection and some capital efficiency, especially because this trade is hogging up 9,100. So, you know, any soldiers we can free from the swamp here are going to be helpful. Our probability of profit right now, 52%, not looking bad. Looking a lot better than it was a week ago. So that's pretty much the portfolio recap, folks. I was happy to come in here and fire it off. Thank you guys for listening, and I'll see you guys tomorrow for the next portfolio recap. Peace.